So we will start today the second topic, accounting for leases, right? Last week we had accounting for financial instrument. Today we will have the accounting for leases. That is based on SLFRS 16, accounting for leases. So this is something very familiar topic, right? Leases. You may have learned it even in your advanced level, right? But this is very broad area leases, and we should discuss about leases from the perspective of party who obtain the lease and party who provide the lease. Both parties accounting. And when it's come to lease providers perspective, we have discussed two types of leases, finance lease and operating lease as well, right? So it has, it is not complicated thing, but accounting treatment relatively, there are few aspects we should look at. So we will start the discussion. So those who are joining online, I hope you can hear me and you can see our screen, right? Those who are joining?
Yes, sir.
Okay. Right. So, first of all, we should look at what is meant by lease. So, lease is an agreement between two parties to hire assets. Agreement between two parties to hire assets. There are two parties. One party is the lessor, other party is the lessee. The lessor is the legal owner of the asset, who rent that asset to lessee. Then the lessee is become the user of the asset. So lessee pay lease rental to the lessor in return of use of asset. For an example, say A is having a motor vehicle. B need motor vehicle for use. So there can be an agreement between A and B. A is the legal owner of the asset. A transfer right of use of the asset. Right? Right of use to asset, right to control the use of asset. Use of asset control किरीमे right है. Transfer करना lessee. In return, lessor receive the rental paid by the lessee. This is what we call leases, right? Lease, in simple term, it is a rent, right? When you are getting asset, the vehicle, building, right, equipment, any asset, what we normally call rent, the more official term is a lease, right? It's a lease. So, because the right of control the use of an asset is transferred from one part to another part. Party who transfer right to control the use of asset is the lessor. Party who obtain the right is the lessee. So here legal owner is the lessor, but actual user is the lessee. Then we have SLFRS 16, the applicable standard for leases. But this SLFRS 16 do not apply for the short-term leases. Short-term lease means the lease period less than 12 months. Less than 12 months lease. So for an example, say if you sell your vehicle, you want to use a vehicle for a few months until you take a new vehicle, purchase a new vehicle. So you may enter into a lease agreement to rent a motor vehicle for 3 months. Right? Those type of short-term leases are excluded from this particular standard. That means this particular standard accounting treatment is not applicable for those leases, short-term leases. Second one, leases for which underlying asset of low value, very small value asset, right? The value of the asset may be 25,000, 30,000, 100,000, right? In that case, no need to apply this particular standard guideline. In these two cases, simply, now first he refers to the books of lessee, right? From the point of view, the party who obtained that right of use asset under the lease agreement. From the lessee's point of view, you can treat the lease payment as an expense. Lease payment as an expense. That's it. You rent a motor vehicle for 6 months. So the monthly rent 50,000 to credit cash debit rent expense. That's it. Okay. Short term leases. So quite straightforward. Okay. You can charge the lease rental as an expense to P&L. Except those two cases, the other type of leases covered by this particular standard SLFRS 16. So we need to follow the accounting treatment of this particular standard, right? You enter into a lease for a building, right? For the use of 5 years, use of 3 years. Motor vehicle, you acquire motor vehicle under lease agreement, right? Lease period 4 years, right? So those type of situations, we need to apply the SLFRS 16. Okay. Except for the short-term leases, short-term means less than 12 months. The original period from the commencement date, period is less than 12 months. Or that lease is for very low value item. So standard doesn't define what is low value, right? That is judgment can understand based on size of the business. You may lease certain cases small equipment, but most of the cases they are less than 12 months, right? But in a case that even beyond 12 months, if you are lease out some small value equipment or something, right? So then you can take that also as a rental, the payment made, lease rental, you can take as expense. Now we move to the accounting treatment for leases in the books of lessee, two party. Lessee is the party who obtained the asset, user. Right, we are going to looking at the lease from the two parties perspective, lessee and lessor. So we start with the lessee. So in the books of lessee, for every lease, you should recognize asset and liability. When you enter into a lease agreement, you need to recognize lease asset and lease liability. Lease asset is named as right of use asset. Because under lease agreement, we get right of use asset. You enter into a lease and say, for example, you want to open a branch, sales outlet, not your own building, lease building, rented building. So you enter into lease agreement for a period of 5 years. Then you can't recognize as building as an asset. Then you have only right of use the building for a period of 5 years. So that asset we call right of use asset. Corresponding, we have a liability because under lease agreement, you will not pay the full amount at once. You will be paying it over a period, right? As lease rental. The total you can recognize as a liability. So measurement at recognition, initially you have recognized right of use asset and lease liability. Then subsequently, this right of use asset you need to depreciate like normal PPE year to year, so that value reduce. And the lease liability reduce when you are making the settlement, right? You enter into lease agreement and obtain a right of use asset for a period of 5 years, then you are paying installment. So by the capital payment, you have to reduce the lease liability. Right. So initial recognition, commencement date, lessee recognize right of use asset and the lease liability. The right of use asset represent lessee's right to use underlying asset for the lease term. Lease term is lease period. So the lease period එකේ lessee ට මේ asset එක පාවිච්චි කරන්න තියෙන අයිතිය ඒ වටිනාකම තමයි represent කරන්නේ right of use asset. So initial recognition of I will start with lease liability, because whatever the amount we recognize as the lease liability, we credit lease liability and we debit right of use asset. So the initial recognition of lease liability measures the liability at the present value of the lease payment that are not paid at the commencement date. That means if you are going to make a down payment, some leases, the asset is 5 million, you need to make a 1 million down payment, so 4 million actually you are leasing, right? So that 4 million is the present value of lease payment. How you get the liability? Normally, you enter into lease agreement, you might say, okay, you pay 1 million and 1.2 million into 4 installment, right? So you will be paying 4.8 million. You have to take the present value of that, discount it, and take the present value of the liability, because we have to exclude the interest portion, right? The liability is the original amount you agree to pay. Now, when you take a bank loan, also same scenario. You take a bank loan of 5 million, but if you are paying it in 5 annual installment, you can't pay 1 million into 5, because you need to pay the interest, right? You will pay 1.2 million, 1.5 million into 5. So you will be paying more. The extra amount is the interest. Similarly, in the lease rental, interest portion is there, since you are paying in installment basis, right? So you can't simply add the all lease rental and say that is the liability, because that lease rental include interest, right? So this is something students confused with, because there is no cash receipt for this liability. In the case of bank loan, you don't confuse with that, because then the cash amount is given, right? But here, when it's come to a lease, just simple example. Right. Now, if you obtain a loan of 1 million, and loan installment, here, loan installment 277,410. And the loan period 5 years. So how much liability you recognize? And here this is interest. Interest rate I take 12%. Right? Right. Now in this case, you can clearly identify your loan liability is 1 million. Why? You receive this 1 million by cash. Right? Instead of that, you enter into a lease agreement to acquire asset. Right? And you are not given what is the lease liability, but lease installment, we don't use the lease installment, we call it lease rental. Right? Rental same as the loan installment. Lease period 5 years, interest rate 12. Now how much is your liability? Your liability should not be this into 5, because that is the total amount you are going to pay under the lease agreement, that includes the interest, same as the loan. So you have to take the present value of all these lease payments, right? So 277,410 paid after 1 year, you take the present value. Another installment after 2 years, you take the present value of that. Likewise, when you take present value over 5 years, period lease rental, that will be exactly 1 million. Now this is your lease liability. Right? In the case of loan, you debit cash and credit loan. This 1 million. This is obvious since you are receiving it by cash. In a lease, we are not receiving cash. Instead, we are receiving some asset, right of use asset. We have debit right of use asset, credit lease liability. Right? This is also 1 million. Here also 1 million. Hello? Hello? Right. So this is just to understand, right? So we will work out some activities in detail. Hello? Right. So what you have to understand, lease liability, we have to take the present value of these payment. For that you will be given the discounting factor, right? That you need to multiply these rentals. Right. So that present value of lease payment, that is what you credit to the lease liability, that we have to debit to the lease asset, right of use asset, the amount of initial measurement of lease liability. Debit right of use asset, credit lease liability. In addition to that, Right. So I was explaining the lease liability, the initial measurement of lease liability always the lease rental, you take the present value of the lease rental, right? The lease payment that is going to be made in the future. So here you see that measurement of lease liability, present value of lease payment that are not paid at the commencement date. Anything paid at the commencement date, that is initial payment, down payment. That you credit cash and debit the asset, that's not become a liability because you are not going to settle it in the future, right? So you see that any lease payment paid at or before the commencement date, that you credit cash and debit the right of use asset account. That's the down payment. That's become part of the asset, but not the liability because that is already paid, right? Then any initial direct cost incurred by the lessee, you can add to the cost of the asset. That is same as property, plant and equipment. If you are acquiring any asset, there may be legal charges. For example, you purchase a building, right? So you need to pay stamp duty, right? Some legal charges. Similarly, in a lease agreement also, you leased out a building, still you enter into a lease agreement, there may be legal charges, right? So that become part of cost of the asset. You don't credit that, debit that into expense. That you credit cash and debit to expense, become part of initial measurement of the lease asset, right of use asset. So liability is basically present value of the lease payment. Then how do you get the present value? To get the present value, if the lease agreement having interest rate implicit in the lease, then you may get lease interest in the agreement itself. Especially now leases we can broadly divide into two types. One is, this is from lessor's perspective. We have finance lease and operating lease. Two leases. So in the finance lease, finance lease interest rate is available. For an example, you lease a motor vehicle, right? Normally with the bank. So in that case, the bank having the lease interest rate because they entered into a finance lease. So in the finance lease, the lease interest rate is available. So you can use that interest rate for discounting. Right? You want to take the present value. Take the present value, you need to discount it, no cash flows, lease rental discount. So you can use that given interest rate. But when the agreement is entered in the form of operating lease, no interest rate. No interest rate. It's like this. You enter into a lease agreement to use a building for a period of 5 years. The agreement between you and the building owner. You agreed the monthly lease rental, no? There is no interest there. Right? You say monthly you are paying 100,000 or if the annual payment 1.2 million, annual payment over 5 years. That is our lease agreement. We get a building for use of 5 years, annual lease rental 1.2 million paid over 5-year period. So then no interest. Then how to discount it? Then in this case, use lessee's incremental borrowing rate for discount. And do the discounting based on lessee's incremental borrowing rate. Lessee's incremental borrowing rate. So what that means? Incremental borrowing rate means now instead of go for a lease, you can get a loan and make that loan payment. Right? Now you take a building on lease, or you can have the loan and make a lump sum payment and get this right of use. It is also possible. Then you have to pay the loan interest. So the lessee as a business, if they go for a borrow for this asset, based on the borrowing, how much the interest that you are going to pay, right? That is normally the bank interest rate that the business can borrow. That is the incremental borrowing rate. So you can take that rate for the purpose of discounting. So you need not worry about that very much when it comes to accounting, because you will be given, right, either interest rate in the lease agreement or incremental borrowing rate, right? You have to use that and discount. So lease payment are discounted using interest rate implicit in the lease if readily determinable. If not, lessee's incremental borrowing rate. Right. So I'll come to this the other parts after considering this activity. Now ABC PLC acquired a machine on the lease basis. 1st April 2019. The following information is provided. Initial payment 200,000. installment, 4 annual installment, 150,000 each to be paid end of each year starting from 31st March 2020. Now this one also should be 2019, right? Because agreement on 2018, normal initial payment also 2018, not 19. Not 18, 19. Agreement date 19. Down payment also made on that date 19. Then annual installments start with the 1 year, 150 each over 4 years. There is a guaranteed residual value paid at end of the lease. That means end of the lease. Normally this is available when the ownership is transferred. After the lease period, because lease is right of use asset, the ownership still with the lessor. But end of the lease term, sometimes there will be some another payment after the ownership may be transferred. So end of the lease term, we have to pay additional 20,000 also. That is called guaranteed residual value, the amount agreed to pay by the lessee end of the lease term. That also part of the lease payment. Initial direct cost incurred by lessee 30,000. Implicit interest rate 15. The amount of lease liability, that is initial measurement of lease liability, and amount recognized as right of use asset. Right. So now initial measurement of lease liability you can take, right? There are 4 lease installment pay 150 each over 4-year period. And this guaranteed residual value 20,000 paid in the 4th year. So accordingly, the lease payment of each year you can take 150, 150, 150. Last year 150 plus 20, 170. And you are given the interest rate implicit 15%. So examination context, these discounting factors will be given to you. Otherwise, you know in finance, you 1 divide by 1.15 first year. That answer divide by 1.15 again. So 1 divide by 1.15 to the power 2 second year. 1 divide by 1.15 to the power 3. Likewise, you can have the discounting factors. Or we can use the discounting factor table, present value table. But financial reporting, these discounting factors will be available in the paper itself, right? So you have to just multiply by discounting factor. Then take the. So the total become 439,686. This is the initial measurement of lease liability. Right? Then the right of use asset. Now this initial measurement of lease liability, you credit liability, lease liability, debit right of use asset. Then the down payment, that you credit cash and debit the right of use asset. Initial direct cost also be capitalized, paid by the lessee. So altogether, it is 686. The right of use asset. Right? So subsequent measurement. Now subsequent measurement, the right of use asset, you can follow the cost model. or basically revaluation model or fair value model. The cost model same as PPE cost model, cost minus accumulated depreciation, right? Cost minus accumulated depreciation. Then how do you calculate the depreciation? Now, property, plant and equipment we depreciate over useful life. That is clear, straightforward. But lease asset, sometimes lease period and useful life may be different. And the ownership of the lease asset may not be transferred even after the lease term. Some leases, after the lease term, ownership transfer. Some leases, after the lease term, ownership may not transfer. Now, normally when you lease motor vehicles with banks and finance company, normally end of the lease term, ownership transfer, right? Or we have a condition you can make a payment and get the ownership, right? So normally ownership transfer, because during the lease period, basically you are paying the full value of the asset as the lease rental, and after the lease term, still you can use the asset for a longer period. But in certain cases, like say building lease for 5-year period, but building is an asset you can use even for 50 years. You lease it out for 5 years. So normally you will not get the ownership, right? Yeah, those are the operating lease from the lessor's perspective, right? Here the lessee's perspective, we ignore whether we are not worried about this operating or finance part, right? That classification is not applicable because accounting treatment same, right? Lease payments you discount and take the present value. That is our right of use asset. Credit lease liability. Now when it comes to depreciation, if the ownership transfer to lessee end of the lease term, depreciate using the useful life same as the PPE. If that ownership is not transferred, sometimes the ownership directly transfer, or sometimes there is an option given to lessee to get the ownership at a very low price. So it's same as automatic ownership transfer. It is obvious that lessee will get the ownership. Now, practical scenario in Sri Lankan context, all these vehicle leases that you entered with banks, finance companies, end of the lease term, ownership does not transfer automatically. There is a additional 1,000 rupees, right? When you pay that 1,000 rupees only, you can get the ownership. That is the condition, right? That's the legal condition. But even bank or finance company, they doesn't ask whether you pay that 1,000 or get the ownership. They add that 1,000 to the last installment. You have to pay that. Then they transfer the ownership, right? So reality ownership transfer. If the ownership transfer years, depreciate over the useful life. That's it. If the ownership is not transferred, depreciate over useful life or lease term. Whichever is short, earlier period. Period එක නිසා earlier තියෙන, right? What is less? Lesser of useful life and lease term. Say for example, you lease a machine for the period of 5 years, and useful life maybe 6 years or 7 years. If the ownership transfer, you can depreciate over 7 years. If ownership does not transfer, then the useful life 7 years, but lease period only 5 years. After that, you can't use it. No. Ownership transferred, ownership is not transferred to lessee means you have to give up the asset. So then you have to depreciate over the shorter period, earlier period, that is 5 years lease term. Right. So that is the condition. So you have to depreciate Under the cost model, you depreciate for the useful life normally. But if the ownership does not transfer, you have to take the earlier of useful life for lease term. Then you can have revaluation model. Like property, plant and equipment revalue, right of use asset also you can apply the revaluation model. Right, revaluation model. Or sometimes you can have a lease asset. That lease asset used as an investment property. You leased a building and rent it for others. Possible? You enter into a lease agreement for a period of 5 years. And that lease building, you lease the entire building and you rent out it for different sales stores, right? Different businesses. So then this right of use asset is held, is a building that is held for earned rental. So then it meets the investment property. Right? So if the right of asset is used as an investment property, then again you can use the cost model. Investment property we don't call the revaluation model, we call it the fair value model. Right? Then you can measure the fair value. Right? Fair value. It's also possible. Right. Then cost model, we normally deduct the accumulated depreciation and if available any accumulated impairment losses. Right? You know that cost minus accumulated depreciation usually, but impairment loss is there, that is a write-off, right? That also you can deduct. Same as PP, that is applicable. Right. So then the lease liability, right? Subsequent measurement. Okay, that is quite straightforward. We can work out it using this activity. Right. Consider the information given in activity 1. Assume that useful life of asset 4 years, lease term also 4 years, useful life also 4 years, then no issue, you can depreciate over 4 years. Prepare the relevant ledger account. Now here you have the initial measurement of lease liability. And right of use asset. Now we can prepare the relevant ledger accounts. We need to prepare right of use asset account. Then accumulated depreciation of right of use asset account and the lease liability account. And I will prepare it for the 2-year period. Right? අවුරුදු දෙකකට අපි ඒක හදමු. It has a 4-year period list, but the question asks the extract for 2 years, so we'll prepare the first 2 years. Right of use asset account, accumulated depreciation account, and the lease liability account. Right. Now initially, now we calculate the lease liability, initial amount of lease liability. We credit cash, credit lease liability, debit right of use asset. 439,686. That is the answer that we got in the activity 1. The initial amount of lease liability. Lease liability credit, right of use asset debit. Then the down payment, we made a cash payment, cash credit, right of use asset debit. And initial direct cost, 30,000 we pay, that also cash credit, right of use asset debit. That is the first day at the inception, you have to make these 3 entries. No? Lease liability credit, right of use asset debit. That is the present value of lease payment. Then the down payment, cash credit, right of use asset debit. Initial direct cost, cash credit, right of use asset debit. Right? This is the answer. Here we get this initial amount of lease liability. This by discounting all these lease payments, we got 439. And the down payment we have to debit. Initial direct cost we have to debit to the lease asset. The other entry for this credit to cash. It's a cash pay. This is the liability payable. Now our lease installment, annual lease installment 200,000. Right? Sorry, 150,000. 150,000 each. So end of the first year, when we pay the first installment, we can credit cash, debit lease liability account 150. Then you can take the depreciation. Now the depreciation interest expense, the first year interest 1920, the original lease liability into 15%. So that included within this installment. So you can't reduce liability by 150. Liability, this is the lease rental. This includes the interest. Interest to charge to P&L. You can charge it into P&L, interest expense. Charge to P&L. So then you can have the balance. Carry forward balance. Balance carry forward. And right of use asset account also we can balance. right of use asset, but you have to depreciate. You can depreciate it over 4-year lease term. So that won't change year to year. So it should be 669,686 depreciate over 4 year. Annual depreciation 167,447. So that you can credit accumulated depreciation debit P&L. So end of the first year, you can have the accumulated depreciation carried forward balance. This. So this become right of use asset opening balance of the next year. And accumulated depreciation, we have this as the opening balance. And the lease liability, we have this 355 opening balance. Now can you complete the second year? Lease liability, actual right of use asset, no change thereafter. Right? The same balance, we can carry it forward. But depreciation, we can account for the depreciation current year, and you can recognize the lease payment, remove the interest. And දෙවෙනි අවුරුද්දේ installment එකක් තියෙනවා 150 නේ. Cash credit, liability debit. දෙවෙනි අවුරුද්දේ ඔක තමයි පළවෙනි entry. ඕක ඇතුලේ තියෙන interest එක ආපහු අපිට හොයන්න පුළුවන් අර වගේම. Now we have to take opening balance 355, for that 15%. Interest expense charged to P&L. Right. මම ඕන P&L යන්නේ වෙන කලර් එකකින් පෙන්නන්න. This one. This one. ඒ වගේම මේ අවුරුද්දේ depreciation එක වෙනවා. The second entry. The third. Same depreciation, you can credit to accumulated depreciation. And you take the balance carried forward. So we prepare this account for the 2-year period. Right of use asset, lease liability, and accumulated depreciation account. Right? Then second part of the question asks extracts of the lessee's financial statement. So financial statement extracts. So we have already identified the depreciation for the 2 year, 167,422, and interest expense 65,000 first year, 53,000 second year. Then the non-current asset, right of use asset cost 669 to deduct the accumulated depreciation and show the carrying amount. Right. I will come to this. So the statement of profit or loss extracts straightforward. We have calculated the depreciation and we have calculated the interest expense. Then the non-current asset, we have to show right of use asset, their cost, accumulated depreciation and the carrying amount. So cost minus accumulated depreciation. You can take each year accumulated depreciation balance, deduct it from the cost. You can show the carrying amount. But the lease liability, now this is a 4-year lease. End of the first year, your lease liability 355. Now that is going to settle over next 3 years. So part of that payable in next year current, balance non-current. So you have to divide it. So financial statement extracts, you have to divide this lease liability as non-current and current. Non-current and current. Lease liability, what is current portion, which is first you can find. Now next year installment would be 150. Second year installment 150. Second year interest we have already identified 53,000. From the second year installment, when you deduct the second year interest, the repayment in the second year is 96,650. Next year lease, every year annual installment of 150. From that you deduct the next year interest payable in the next year, second year. Right? This is 2020. 2020 වල current liability එක වෙන්නේ 2021 වල ගෙවන්න තියෙන ප්‍රමාණය. 2021 වල අපි 150 payment එකක් කරනවා. ඒක ඇතුලේ 53,000 interest තියෙනවා. So repayment of liability 96. Then the non-current portion, Total liability is 355. From that 96 current means balance non-current. 355 minus 96, 258. Right. Now second year lease liability, the total lease liability end of the second year 258. Now that is going to settle in next 2 years. So of that, how much current you can take 150 installment, then 15% of this, right? 258 is the outstanding balance end of the second year. Third year we should pay 15% to that balance. So that is 38,848. So current liability end of the 21, the second year, 111,000. From the total now 258, when you deduct 111, balance is non-current. So this classification is important when you are showing the statement of financial position extracts of 2020 and 21. Any question? Right, even those who join online. So if you have any question, you can ask. Right. Now this repayment part we have to identify from the 150 installment, deduct the interest. So we can have this loan repayment schedule. When you have this schedule, even without preparing the account, you can identify this interest expense as well as this lease liability, current non-current portion, right? Sometimes in the question, if you are not asked the account, then you can just prepare this lease liability repayment schedule. So original lease liability we had 439,686 brought forward balance. Rental is 150. The interest, this opening liability into 15%. 65. Right? This is the opening balance. Rental. Then you can deduct the repayment. You can deduct the interest from the rental. You can identify the first year repayment. So from the opening liability, you deduct the repayment. You will get the closing liability. That becomes the second year opening. Rental won't change 150. Interest, this balance into 15%. So repayment 150 minus interest. Opening balance minus repayment, you will get the closing balance. Second year closing balance become third year opening balance. Lease rental 150 won't change. This opening balance 15%, 38. Interest. Repayment 150 minus interest. So opening balance minus repayment will get the carried forward balance. So 147 opening balance. Now rental here, the lease rental at 150 plus 20,000 guaranteed residual value. Last year we are paying 170, right? Remember here 170 total lease payment. Interest, this opening balance into 15%. Take the repayment. So it tells. This is the lease liability repayment schedule. right? Okay, so then we can move to the next activity, activity 3. Activity 3, Platinum PLC leased an equipment from Y. The following terms: date of lease 1st April 2019, duration 3 years, down payment 200,000, made on 1st April 2019, annual lease payment 150 to be paid 31st March 21st one, so 2021 22. Legal charges paid by the lessee 20,000. Useful life 5 years. Now useful life 5 years. Lease term 3 years. So these two are not same. So we have to consider whether ownership transferred or not. No residual value. Lease interest rate is 12%. Ownership transferred end of the lease term. If the ownership transferred, you can depreciate this over 5 years instead of 3 years, right? Over the useful life. Your lease period 3 years, after that ownership transfer, so lessee can use it for the remaining 2 years as well. So you can depreciate over 5 years. Okay, we can calculate the lease liability and right of use asset first using that schedule. Shall we prepare schedule as we did in the previous one? I will give you the discounting factor, right? That is normally given in a sum. So you can complete this and identify the initial amount of lease liability and right of use asset. Right, so this one lease rental, 3 lease rental, 150, no guaranteed residual value actually, right? So you can even ignore that part. So it is 150 multiplied by the discounting factor and you get the total, which is 360,000. Then initial amount of lease liability, you have to add to the right of use asset, then the down payment and the initial direct cost. Altogether, 580,285. මේක පොඩි ඩෙසිමල්ස් වෙනස් වෙන්න පුළුවන් right මේක මේ Excel එකේ තියෙන නිසා අන්තිම ඩෙසිමල් එකට නිකන් කැල්කියුලේට් වෙලා තියෙන්නේ. ඕගොල්ලෝ ඩෙසිමල් හතරට ගත්තොත් පොඩි වෙනසක් එන්න පුළුවන් doesn't matter. right approximately 360,000 kit වේග යන ගාණක් එනවා. Right. Now we can prepare the right of use asset account, lease liability account and accumulated depreciation account. Right. Once you have this, you can have the 3 accounts, same as what we did in the previous section. Right. You need to open right of use asset account, lease liability account, and accumulated depreciation account. So initial amount of lease liability, right of use asset debit, lease liability credit. The amount එක අපි හොයාගත්තා. Right? 360,000. Then the down payment, 200,000 you credit cash, and initial direct cost 20,000 you credit cash, debit right of use asset. So the right of use asset balance is 580,285. Right. So you can calculate the first year installment. We pay installment 150. Then you can calculate the interest included in that installment. So lease liability 360, 285 multiplied by 12%. So it should be 43,234. So balance carried forward 253, 590. Then now you have to depreciate this 580,000. 285. That is your asset balance. Depreciate over 5 years. Which is 116,000. So your carried forward balance should be the same. So the Asset, you will have the same opening balance next year. Liability, now we have 253,519 opening balance. Accumulated depreciation 116,57 opening balance. So second year again we pay 150,000 second installment. Now interest out of it, 12% of this 253. That is what we should charge to PNL. 253,000, 12%, which is 30,000 and 22. So end of the second year, we have the carried forward balance 133. Second year, this is the first entry. And second year, second entry. Interest recognized. Second year, third entry, you can have the depreciation charge to PNL. The carried forward balance. So we complete the ledger account for 2 years. Right of use asset, no change. You can carry forward the same balance. Right? So we can have the financial statement extract. So here we can prepare the lease liability repayment schedule here. Original lease liability we identified 60,285. Right? Can you complete? Right. So rental every year 150,000, won't change. So interest 12% of the opening balance. So repayment 150 minus interest, to get the closing balance. First year closing balance becomes second year opening balance. And 30,000 interest. Likewise, you can complete this. Right. So can you complete this part? We'll take it for 2 years, third year not necessarily. 2020. So actually depreciation and interest we have already identified. Make it straightforward. විශේෂ දෙයකට තියෙන මේ lease liability එක current non current කියලා බෙදලා දාන්න. You have to divide the lease liability as current and non current. So here that the lease liability end of the first year, current portion 150 minus second year interest. Second year interest is 30. So current portion of lease liability this much. Then the total 253 minus 190. Non-current portion this much. Second year එකට යනකොට අවුරුදු 3යි lease period එක, so there is no non-current part. The entire 133 become current. ඒකේ calculate කරන්න දෙයක් නැහැ because last year non-current liability become current. That is the total outstanding. End of the second year we have 133 that is going to settle in the next year. So we discuss leases in the books of lessee. Then we will discuss leases in the books of lessor after the break. Right, we'll have a short break. So 10:40 will start at 11. Okay, so if you can send it today, better. Okay. Today or during this week, okay, right. Hello. දැන් මම ක්ලාස් එක. කොහෙද? කොහෙද? අර මෙයාගේ print out එක ගත්තද? උදේ නෑනේ. මොකද්ද පොත් දෙකක් ගේන්න කිව්ව එකක් තමයි radiant wave 1 එක. අනිත් එක මොකද්ද කුමාරෝදයනේ. ඒකට මොනවද මේ වැහෙන පිටකවරයක් දාන්න කියලා සම්පූර්ණ. දාලා නම් කියලා. හරි ඔයාලා එතනින් 12ට ඉවර වෙන්නේ. Right. So those who joining online, any question up to this point? So we discuss accounting for leases in the books of lessee. Right. Then we will start accounting for leases in the books of lessor. Right. So then we'll start the discussion. So here we discuss the accounting in the books of lessee. Now I will go through the remaining part of the theory. So basically, the right of use asset include initial amount of lease measurement, any lease payment made before the commencement date, like lease down payment, initial direct cost. Then similar to property, plant and equipment, any estimate cost to be incurred by lessee in dismantling or removing underlying asset or restoring site. This is rarely applicable, like you lease a kind of plant, right? So after the useful life, you have to remove it, dismantle it. Then that will be a liability. You have to make a provision for that. And the cost you have to estimate that you have to incur. This is same as property, plant and equipment. Certain type of plant, you can't just remove, right? Once you install it, after using, you have to dismantle it, clean the site, right? Some environmental affecting plants. So that cost become part of the cost of PPE. Same thing applicable for if you have lease out such kind of asset. So rarely applicable. Then the lease liability we discuss is the present value of the lease payment. So lease payment, but we discussed the fixed payment, right? 150,000, 200,000. Then there may be variable lease payment. Sometimes lease payment not fixed, right? Maybe linked with some index, inflation, right? So in that case, you have to estimate what would be the variable lease payment. But normally, you get fixed payment. The amount expected to be paid under the guaranteed residual value. So that we discussed, the lessee guarantee that at end of the lease term, the residual value you are going to pay normally to get the ownership, right? So that amount part of the lease payment. Or exercise price of a purchase option. Sometimes the ownership will not transfer directly. There is a purchase option, but that purchase option price is very low price compared with the market price of that asset at that time. So it is reasonably certain that lessee will use the option at purchasing. So if you have such option price, that also become part of the lease payment in the last year. Payment of penalties for termination of the lease if the lease term reflect that lessee is exercising option to terminate the lease. That means you won't lease this asset only for 5 years. But say you want only for 4 years, but lessees, the lessor's point of view, they have standard agreement, they lease out only for 5 years. But you negotiate a termination option. After 4 years, you can terminate the contract lease. So you have to pay some fee. That also part of payment you made to use this asset over a 4-year period, right? So you are not going to make the final fourth lease, fifth lease payment. Instead, end of the 4th year, you are going to terminate the lease. So at the inception, if you expect that even the original lease term is 5 years or 6 years, you are going to terminate it in 4 years by paying that penalty. So that penalty become part of your lease payment. These are rarely applicable things when it comes to lease, right? So we discuss lessee's point of view, how to account leases in the books of lessee, right of use asset and the liability. Then we move to the accounting for leases in the books of lessor. When it's come to lessor, that the lease, first you have to identify whether the lease is a finance lease or operating lease. That classification has nothing to do with lessee's point of view, right? Lessee's point of view, accounting treatment always debit right of use asset, credit lease liability, irrespective of the type of lease. That's why we did not worry about whether lease is a finance lease or operating lease from the lessee's point of view, right? Total lease payment, you take the present value and identify the lease liability, credit lease liability, debit right of use asset. Whether it's a finance lease, operating lease, you have to go ahead with that, right? But lessor's point of view, the accounting treatment totally different. Whether the lease is finance lease or operating lease. In substance, in finance lease, with the right of use asset, risk and rewards are transferred to lessee. All risk and rewards transfer. Transfer substantially all risk and reward incidental to the ownership. So only the legal ownership is with the lessor, but effectively in reality, the lessee become owner because risk and reward transfer means, when you make sale of goods, we identify the sales when the risk and reward transfer to the other party. So in an asset, risk and reward transfer means in reality it is like a sale. So in finance lease, the lessor should de-recognize the original asset. So if you enter into finance lease transaction to a motor vehicle owned by the business, you should de-recognize the motor vehicle because the motor vehicle risk and reward transfer, right? So it's no longer asset of the business. Now, this is what applicable for banks, finance companies, when they lease out motor vehicles. Risk and reward transfer. The legal ownership, the ultimate owner, until complete the lease payment, it is with the bank. But other than that, right, bank keep the original of the registration book. But other than that, the lessee can use the vehicle as their own vehicle. Lessee should insure, right? So who bear the risk, right? Lessee can get the rewards, lessee will get the economic benefit by using the asset. So in the finance lease, the lessor de-recognize the lease asset. Instead, lessor recognize lease receivable, opposite of the lease liability. It is very similar to the lease liability account of the lessee, opposite lease receivable to the lessor. Right? So bank, finance companies, they recognize this lease receivable because they normally transfer the enter into lease agreement as finance lease. Operating lease means does not transfer risk and rewards. So owner keep the risk and reward. So it's purely a rent. Now you rent out a building, right? Building owner rent a building for 5 years. Building can use for 25 years, 50 years, 100 years. So you lease it for 5 years, 10 years. But the risk and reward is not transferred. It's not equal to sale. You just rent it. So the original asset building do not recognize by the lessor. Lessor keep the original asset building and depreciate it over the useful life. So lessor need not to recognize the lease receivable because you keep original asset. The lease rental is the income in operating leases. Right? So you see, finance leases, the lessor de-recognize the asset, lessor recognize the lease receivable account. So when the lease rental received, you have to reduce the lease receivable. Only interest income you recognize as income in a finance lease. Rental is not the income. Rental include interest and recovery of the lease receivable. But in operating lease, it's simply rent. You rent a building, you rent a vehicle. So you recognize the rent income, but you keep your building and or the vehicle as it is and depreciate it over the useful life, irrespective of the lease term, right? So that accounting treatment you find different. So the differentiation between finance lease and operating lease based on whether risk and reward transfer or not. That is the point that you differentiate finance lease and operating lease, whether risk and reward transfer or not. But this risk and reward is accounting terminology, right? It's coming from accounting terminology. In business lease agreement, you don't find they mention that according to the lease agreement, risk and reward transfer to lessee owner, right? So lease is a commercial transaction. In this commercial transaction, you may find some other conditions. Looking at those conditions, we can determine, okay, if these conditions are there, that means risk and reward transfer. So these are some examples. When one of these features are there, that means risk and reward transfer at the beginning. So that lease should be a finance lease, right? These are the practical conditions which will be available in the lease agreement. That we can determine, okay, the risk and reward transfer, so it should be a finance lease. The most simple condition is lease transfer ownership of the underlying asset at end of the lease term. So if the end of the lease term ownership transfers, that means, say you enter into a lease agreement and transfer right of use motor vehicle for a 5 year. and after the 5-year ownership transfer. That means whatever the useful life of this asset from today, if you enter into lease agreement, will be used by the lessee. So in substance, it is equal to sale. So I told you finance lease in substance equal to sale. That is why lessor derecognized. So when the ownership transfer to lessee at end of the lease term, right, then it is finance lease. Then instead of transferring the ownership, lessee may have given an option to purchase the underlying asset at a price that is expected to be sufficiently lower than the fair value at the date option become exercisable. So it is reasonably certain at the inception of the lease, the lessee will use the option, exercise the option. This is what practically find in Sri Lankan context, right? Even these finance leases, these motor vehicles, most of the companies motor vehicles, when they lease, the condition is there, right? You have to pay 1 million over 5 years. End of the 5 year, you have to pay 1,000 rupees or 10,000 rupees. It has an option. Pay an additional 10,000, you will get the ownership. If you don't pay that 10,000, ownership will not be transferred. So it is obvious that when you pay 5 million for a vehicle over 5 years, end of the 5 year, paying balance 10,000 and getting the ownership, even though it's an option, right, it is 100% certain that lessee will use the option. So it is in substance same as the first one, ownership transfer end of the lease term. Here also ownership transfer, but it is technically, legally, it is as an option. Then lease term is major part of economic life. Economic life is different from the useful life. The economic life means the time period that asset can economically generate benefits. Asset can generate economic benefit. Because useful life of an asset can vary business to business. You know, same type of motor vehicle, one business depreciate over 5 years and the business depreciate over 10 years. That is possible. Because that is the estimate. Like a business එකක් කියනවා right අපි මේක අවුරුදු 5ක් පාවිච්චි කරලා විකුණනවා. ඒතර අපේ useful life එක අවුරුදු 5යි. තව business එකක් කියනවා මේක අවුරුදු 10ක් පාවිච්චි කරනවා. Economically this vehicle can be used for 15 years. Right? You can get the economic benefit for 15 years. So if we enter into lease agreement for this motor vehicle and give this vehicle for 15-year lease or 14-year lease, 13-year lease. So useful life 15, 13 years lease out means almost the economic benefit will be using by the lessee. So it is similar to say, ඒ අවුරුදු 15ක් useful life එක තියෙන asset එකක් අවුරුදු 15ම වෙන්න පුළුවන් 14ක් 13ක් වුණා 13ක් දෙනවා කියන්නේ 95කට වඩා benefits පාවිච්චි කරලා ඉවරයි. Right? So it's like I said. So irrespective of the ownership, if the lease term cover major part of economic life, then it's a finance lease. Then present value of lease payment is almost equal to the fair value of the asset. When you take the lease payment present value, that is almost equal to the fair value of the asset. So that is how normally this lease rental is determined, right? When you transfer finance lease කියන්නේ විකුණනවා වගේ අද 5 million වලට විකුණන්න ඕන asset එක අපි අවුරුදු 5කට lease කරලා විකුණනවා. So lease installment එක අපි හිතමු 1.5 million. 7.5 million අපි ගෙවනවා. Interest rate එක 120ක් විතර දෙනවා. discount කරාම 5 million වලට කිට්ටු ගණක් එනවා. Right? 5 million හරියටම හෝ ඊට පොඩ්ඩක් අඩු වැඩි වෙන්න එනවා. ඒ කියන්නේ this is a finance lease, same as a sale. Then underlying asset is such specialized nature, only lessee can use it without major modification. So that means, so specific type of asset. So lessor has no use of keeping risk and reward. Right? අපි හිතමු උදාහරණයකට අපි මොකද manufacturing plant එකක් පිටරටකින් import කරලා install කරන්න ඕන. අපි bank එකකින් ඕක lease කරනවා. මේ manufacturing plant එක bank එකට තියාගෙන වැඩක් නැහැ. bank එකට ඒකේ risk and rewards තියාගෙන වැඩක් නැහැ. ඒක ඕන අපේ factory එක. ඒ වගේ agreement එකක් නම් අනිවාර්යයෙන් finance lease තමයි එන්නේ. right? Bank transfer the risk and rewards. No point of keeping risk and rewards with the bank. Right. Now we'll look at the accounting treatment for finance leases. Finance leases at commencement date, lessor shall recognize asset under finance lease in the statement of financial position and present as receivable that is equal to net investment in lease. This is lease receivable. Net investment in lease means gross investment in lease discounted at the interest rate implicit in the lease. So gross investment in lease means basically what is the lease rentals you are going to receive opposite of the lease payments. Here that the lease rentals you are going to receive, all those lease rental plus any residual value, everything you discount and identify the present value as the lease receivable. Lease receivable. Right. Consider all information given in activity 3. Prepare the ledger account in the books of lessor. Right. Go to the activity 3. This one. So there's a 200,000 down payment, 150 into 3 years. Right. Interest rate 12%. So now this equipment is transferred by Platinum PLC to IPLC. Now we are going to look at the accounting treatment in the Platinum. Now Platinum de-recognized the asset. Right? The asset de-recognized, the amount receivable is the 150 into 3 year discounted. Here we identified right of use asset. Now this amount is the value that lessor going to receive over a 3 year period. That is the, in other words, that is the consideration that we receive by transferring this asset. Right? So equipment should be similar to the disposal. You recognize the asset. You can transfer that into a disposal account. Asset value, existing asset value, and this should be credited there. Right? This is the present value of the lease rental that is going to received by the lessor. So this is the net investment in lease. දැන් මේ වෙන දෙයක් අපි කෑෂ් වලට විකුණනවා නම් මේ ඇසෙට් එක අපි විකුණනවා 360,000. ඒ වෙනුවට අපි මේක ලීස් කරලා දෙනවා. Same as cash, same as a disposal. දැන් අපිට මේ ඇසෙට් එකේ carrying value එකක් මොකොත් දීලා නැති නිසා අපි එතන disposal profit එකක් හොයන්න යන්නේ නැහැ. එහෙම දීලා තිබුණා නම් අපිට මේ දෙක අතර වෙනස ඒ වෙලාවේ disposal profit එකක් වෙනවා. Right. Now we can prepare the lease receivable account. Yeah, this one, lease receivable. Right? So lease receivable account, the present value of lease payment that is going to receive. Right? එතකොට මේ අපේම අපේ දැනට තියෙන equipment එකක් නම් අපි equipment එක credit වෙන්නේ මෙතන. සමහර වෙලාවට මේ අපි බැංක් එකක් වගේ නම් වෙන්නේ මේ equipment ඕනට අපි සල්ලි දීලා asset එක දෙනවා. දැන් අපි උගක් වෙලාවට බැංක් එකක් vehicle එකක lease කරද්දී car sale එකට තමයි check එක දෙන්නේ. right? එතකොට lessee අරගෙන යනවා vehicle. ඒ වගේ නම් අපේ cash credit වෙන්න ඕන. Right? So anyway, that is your lease receivable, net investment in the lease. Then end of the first year, we are receiving 150. We are receiving 150 end of the first year. දැන් අපි බලන්න ඕන interest income එක opposite එක. මේකෙන් 112යි. Right? Opening balance into 12%. So carried forward balance is 253,590. Second year, we have the lease receivable balance, opening balance. The second installment we received debit cash credit 150. දැන් අපි less ඕනේ අපිට ලැබෙනවා 150. මේක ඇතුලේ තියෙන interest income එක බලන්න ඕනේ 12% of the opening balance. Then can have the balance carried forward. Third year lease receivable opening balance. Third installment will be received by cash. So income 12% of the opening balance. So we have no carried forward balance. It is fully settled now. අවුරුදු 3 interest income එක එනවා 43, 30 and 60. Right. You know, the lease receivable first year 253. From that 150 receivable in the next year. So from that 30,000 interest you deduct, then the balance current liability, current asset, now lease receivable. Then the lease receivable non-current part, the balance. That will become current end of the next year because it's a 3-year lease, right? So end of the 3rd year, no lease receivable. End of the 3rd year, full lease receivable amount, this 133 received with 150 when you leave out the interest, so no balance. This is how we record the accounting for leases, finance leases in the books of lessee, lessor's perspective, the party who leased the asset. This is how we have recorded. Okay. So those who joining online, any question? This is finance leases from the lessor's perspective. Accounting for leases from the lessor's perspective. You have to first identify whether it's a finance lease or operating lease. Right. Then we take operating leases. The operating leases, very straightforward. Lessor recognize the lease payment as income. You leased out your building, the annual lease rental become income. You keep the building as it is, you depreciate it same way. Now, if there is any initial direct cost incurred by lessor, now in the case of finance lease, any initial direct cost incurred, you can defer over the lease term. Now, initial direct cost, you recognize, in the finance lease, initial direct cost, now if you are a manufacturer, you are a seller, right? Then initial direct cost is relating to the sales transaction. So initial direct cost you directly charge to PA. Now, for an example, you are selling machineries, right? You can sell the machinery, say 5 million machinery, plant, cash basis or lease basis, right? You are the manufacturer. So in that case, this is your sales now, right? So here, in the lease receivable is actually debit lease receivable, full amount, right? The amount that you are going to recognize, this is your sales, right? So you have to recognize the cost of sales, remove from the inventory. You have the gross profit also, right? That is applicable when the lessor is the seller, the manufacturer of an item. So initial direct cost become part of the expense. You can charge to P&L, right? It was a sales transaction, similar to sales transaction. But in a operating lease, you enter into operating lease means you are not selling anything, right? Finance lease is similar to sales. The operating lease means you have your own building, you lease out it, and you recognize the lease rental. Say we lease for 5 years, so you recognize the lease rental over 5 years. Then any initial direct cost we amortized over 5 years, because rental income recognized over 5 years. So any initial direct cost, that also should be amortized over the 5 years. Then you depreciate the asset as the normal way, right? Here we have activity 5. First we go through this. Beta PLC entered into a lease agreement and transfer right of use of an building to Alpha for the period of 5 years. Beta had purchased this building on 1st April 2014 for 5 million and estimated a useful life of 20 years. So 2014, useful life 20 years. Now 2019 means it is 5 years already depreciated. According to the lease agreement, Alpha pay annual lease rental 400,000, commencing from 31st March 2020. Incremental borrowing rate of Alpha 15% per annum. Initial direct cost incurred by Beta 50,000, and shall we add initial direct cost incurred by so here we take initial direct cost incurred by Beta 50,000 and Alpha also 50,000. So I will prepare this, the both lessee and lessor, right? So then make it complete, right? So you can see same transaction, how it is accounted by lessee and the lessor, right? Prepare the ledger account. Question asks only the lessor, right? Now if you take how in the lessee's book, this is going to account. Lessee's point of view, you need to identify the present value over 5-year period, right? 400,000 is rental, 400,000 lease payment, over 5 years. So lease interest rate 1.15, interest rate 15%. ඒක සාමාන්‍යයෙන් වලට දෙනවා, right? Worry about this. 1 divided by 1.15. So it's 15 interest rate. Yes. Then multiply this. This is discounting factor at 15%. So initial amount of lease liability, you have to add all this. 1,300,000. In an operating lease, we normally don't find any down payment. But there's a 50,000. I add 50,000 paid by both alpha and beta. So right of use asset 1,390,862. This is in the books of lessee, right? අපි ලෙසෝ ගැන කතා කරේ නමුත් මේක මම ලෙසීගේ පැත්තත් හදලා ලෙසෝගේ පැත්තත් හදනවා අන්තිම question එක, right? So then it will be more clear. Lease liability එක එන්නේ, this is lease liability. Right, 380. Right of use 1,348,662 lease liability that you debit to the right of use asset. Plus the initial direct cost, right of use asset would be this. Right. Now I am going to prepare these accounts for 2-year period. This is in the books of lessee, right? Books of lessee. So right of use asset is no down payment actually. So right of use asset, we credit lease creditor, debit right of use asset. This much, 1 million 200 340,000. Debit right of use asset. Initial direct cost 50,000. So I am adding that. That is the right of use asset balance carried forward. Then the first installment 400,000 pay. ඔක interest එක තියෙනවා. මේ opening liability එකට 115 201 interest. And lease liability carried forward balance එක වෙන්න ඕනේ. $1,141,000. Second year, that become the liability. Okay, 150 ගෙවනවා. The liability. ඔන්න interest එක පෙන්නන්න පුළුවන්. පළවෙනි අවුරුද්දේ 1,340,000 862 into 15%. Second year, 1,141,991 15%. The interest. Then the depreciation, you have the right of use asset 1,390,000. 862, you got this right of use asset for a period of 5 years. Depreciation should be this amount divided by 5. This is your annual depreciation. Which one? Sorry, 400. This I'm just taking the previous Excel sheet balance, right? So the carried forward balance is 390. My copy කරලා ගත්තේ පරණ value එක 400, right? So closing balance 930, right? Then right of use asset depreciation can have depreciation expenses 217,182. The second year also the same. You can have the carry forward balance like this. This is how we made the account in the books of lessee. This is what you are familiar with in the books of lessee. So you see whether it's a finance lease, operating lease, doesn't matter. You discount the lease rental, take the present value, debit right of use asset, credit lease liability. Then lease payment, you credit cash, debit lease liability based on the interest rate. Either interest rate implicit in the lease or lessee's incremental borrowing rate. Here we have lessee's incremental borrowing rate. Because this lease agreement, 400,000 annual rental of the building. There is no lease interest in the lease agreement. So this 15% is given as the incremental borrowing rate, right? Of lessor. May interest එක 15 කියන්නේ incremental borrowing rate of alpha lessor ගේ පැත්ත. Right. Then we can move to the lessor's point of view. This is lessee's account. Then we can have the lessor's account. Lessor's perspective. So lessor's perspective, the lessor can keep the building, lessor should depreciate the building, lessor should recognize the lease rental income. And in addition to that, lessor also incur initial direct cost 50,000 that should be amortized over 5 years. Right? So take this.
Mama. Hello.
So we have building account. Yes. Yes. Right. Then we'll have the lease rental account and initial direct cost account. So building account, the original cost of the building is given, right? 50 million. So I'm taking in 1,000, 50,000. නැත්නම් මේක rupees 1,000 වලින් මම පෙන්නලා තියෙන්නේ ලෙසෝගේ පැත්තේ, right? නැත්නම් 50 million ම පෙන්නන්න පුළුවන්, right? So you can carry forward that building 50 million as it is. Balance carried forward 50. It become balance brought forward next year. Brought forward 50, carried forward 50. 50 million, right? So depreciation, which is already depreciated for 5 years. So out of the 50, 12,500, 12.5 million depreciated. This year you should charge to P&L 50 divided by 20. The annual depreciation 2,500. So you can have the balance carried forward 15,000. Second year we have 15,000 and charge to P&L 2,500. So balance carried forward 17,500. Welding 5 million. I'll remove the 1,000. I'll turn 1,000 and 5,000 තියන්න පුළුවන්. අපි උඩ එකත් 5,000 පිට නිසා මම මෙහෙම යනවා. මේක 5,000 වුණොත් 5,000. අනිත් එක හරි. එතන 1 million 250,000 250,000 depreciation. Yeah, this way 5 million. Initial direct cost incurred by cash $50,000. So I assume both alpha and beta spend initial direct cost. Then මේක අපි අවුරුදු 5කට P&L charge කරන්න ඕන. මේ අවුරුද්දේ P&L charge වෙනවා 10,000. Balance you can carry it forward 40,000. The annual lease rental, you can recognize the lease rental income. Debit cash. $400,000, right? මම මේක rupees වලින් හැදුවා. thousand ignore කරා. You want, you can have it in rupees, 1,000. But since lessee's books I prepare in rupees, so lesser also I go ahead with rupees. So you charge to P&L. එතන මේකේ පළවෙනි එන්ට්‍රි එක වෙන්නේ initial direct cost එක. දෙවෙනි එන්ට්‍රි එක වෙන්න ඕන lease rental income එක. සහ ඊළඟට අපි පුළුවන් මේක cash හරිනේ. cash හම්බ වෙනවා ඒක P&L යනවා. ඊට පස්සේ initial direct cost එකෙන් amortize කරන එක යනවා ඊළඟ depreciation යනවා right. කෝඩ් එකේ මේ වුණාට කමක් නැහැ. දෙවෙනි අවුරුද්දට ගියාම දෙවෙනි අවුරුද්දෙත් අපිට cash හම්බ වෙනවා. $400,000. That 400,000 is charged to P&L. This initial direct cost, we have a debit balance brought forward 40. Making 10,000 P&L charge කරන්න. So now balance carried forward 30. This is how we maintain the accounts in the books of lessor for operating leases. Now we can have the financial statement extracts. So statement of profit or loss, you take the rent income. Lease rental income. So you can have the 400,000 annual rent income. Then the depreciation of building depreciation, it won't change, 250,000 each year. And amortization of initial direct cost 10,000 you charge to P&L as expense. Amortization of initial direct cost. Then you keep the building. Building 5 million. From that, deduct accumulated depreciation. Then this unamortized initial direct cost until it amortizes, we add to the hello. Oh. මම තව විනාඩි 10ක් විතර එනවා. හරි okay. Right, on කළා. හරි. Right. So unamortized initial direct cost first year 40,000 and year 30,000. So that is added as a part of asset. Why you leased out this asset and you have spent some direct cost. For that you are generating 400,000 income. You write off this initial direct cost over 5 years. So unamortized initial direct cost we add to carrying amount of the related asset. Right? That is something new, right? Normally අපි PP එක පෙන්නන්නේ 3.5 million 3,275. But this unamortized initial direct cost 40 and 30. You can add to this carrying amount, and final carrying amount you can increase by that. So this activity we have lessee and lessor both. Both party we discuss the accounting treatment. It's an operating lease. So whether it's operating lease, finance lease, doesn't matter. Lessee's point of view, same accounting treatment, right of use asset, lease liability, and you have to depreciate the right of use asset over the shorter of either lease useful life, or if ownership doesn't transfer, the earlier of the lease term or useful life. Lessor's point of view, lessor keep the asset, building keep it, depreciate it, rental income charged to P&L annually, initial direct cost should be amortized over the lease term. දැන් හොඳට මතක තියාගන්න මෙතන lease receivable එකක් නැහැ. ඇයි? lessor asset එක derecognize කරන්නේ නැහැ, building එකේ ආයේ කොහොමද තියෙනවා. Right? But lessee recognize lease right of use asset and lease liability. Right? Any question? Right? So you should be able to prepare the accounts or provide extracts in the books of lessee as well as in the books of lessor. When it's come to lessor, the accounting treatment is totally different between finance lease and operating lease, right? අපි කලින් activity එකේ මෙන්න finance lease වල lessor ගේන්නේ lease receivable account එක, interest income එක, සහ lease receivable. That's it. Right? my interest income එක වෙනම පෙන්නුවේ නැහැ. මෙතනින්ම P&L ගෙනිච්ච අපිට ඕන interest income account එකක් හදලා එතනට මාරු කරලා එතනින් අවුරුදු අන්තිමේ P&L යනවා කියලා පෙන්නන්න පුළුවන්. Right? So in a finance lease, lessor derecognize original asset, equipment, machinery, vehicle, whatever should derecognize. Right? එතන gain එකක් හරි loss එකක් හරි එන්න පුළුවන්. Right? ඉතින් අපි කියන්නේ පොරි වෙන්නේ නැහැ මොකද ඒක සාමාන්‍යයෙන් disposal පැත්ත. මෙතනදී ફોકස් කරේ ලීස් එකට අදාළව ඩිරෙක්ට්ලි ලීස් රෙන්ටල් එක ඉන්කම් එකක් එනවා. ලීස් රිසිවබල් එකක් එනවා. ඒක අර ලීස් ලයබිලිටි එක වගේම කරන්ට් නොන් කරන්ට් කියලා බෙදලා පෙන්නනවා. මේ ඔපරේටිව් ලීස් වලට ගියාම lessor keep the original asset, no lease receivable, instead you have the lease asset, the building or machine, whatever, that is depreciated over the useful life. The initial direct cost should be defer and amortize. And the lease rental annually recognized as income to PA. Right. So we discuss the accounting for leases. And as I told you, you have the group presentation. You will be allocated some accounting standards, right? So some of the accounting standards in the syllabus, we will allocate you for your group presentation, right? So because we have large content, right? So cannot cover it within 15 weeks, right? Standards මත තියෙනවා 10ක් විතර. ඊට පස්සේ company financial statement තියෙනවා, consolidation තියෙනවා, financial analysis තියෙනවා. ඒකට පොඩි standards ටික අපි group assignment එකට දෙනවා. Major standards ටික අපි lecture series එකේ cover කරනවා. මොකද මේ standards ටික ඉවරනාට පස්සේ අපි company financial statement එතනත් මේ වගේ adjustment එන්න පුළුවන්. right? And company එක සාමාන්‍යයෙන් normal company financial statement කිව්වම final account කිව්වම අර accrual prepayment ඒක අතන්තර නෙමෙයි. Practically standards එක කොහොමද අපි හදන්නේ? right? This is undergraduate program. අර A level මට්ටමට වඩා වෙනස්. A level වලට ඔයගොල්ලෝ සමහර standard link කරනවා A level වල තිබ්බ. ඒ වගේම තනිකරම adjustments කියලා ඉන්නේ standards ටික. right? ඊට අමතරව standard question වෙනම test වෙනවා. ඔයාලගේ syllabus එකේ තියෙනවා company accounts 30 that is including consolidation, standard 40. A standard 40 marks වලින් කොටසක් standard වෙනම question විදිහට දෙන්න පුළුවන්. lease වල මොකක් හරි ගාණක් දීලා financial statement extract ledger accounts ආන්න පුළුවන්. ඊට අමතරව lease adjustment එකක් එන්න පුළුවන් company